Facebook stock is a very interesting one that I get asked about on a very frequent basis. And while the stock is technically up over 140% in the past 5 years, it's really been struggling recently because of market volatility along with some very negative PR relating to data security issues and a slowdown in user growth primarily coming from their Facebook platform, now bringing the stock down over 25% from their 52-week high of around $218 per share to now trading for around $161 per share. Although to be fair, they were actually down much more, but has since seen a significant rebound in the last few months. In any case, Facebook remains a very popular stock, and because we're now in 2019 and they just released their fiscal 2018 results just a few weeks ago, I thought it'd be a great time to do a full analysis on Facebook stock and let you guys know if I plan on buying anytime soon. So please consider hitting the like button if you enjoy this video, and let's go ahead and get started. What's up everybody, my name is Ala and welcome to my world of stocks. Now in case you don't know, I used to own a small position in Facebook, but it was really more of a short-term play, and after cashing in some profits, I just never really jumped back in. Having said that, despite not being currently invested in Facebook, I do still believe in their future and especially in their future potential with Instagram. Just running through some of the numbers here, we can see that Facebook alone commands over 2.3 billion monthly active users, and despite that number already being astronomically high, it's still growing. In fact, it grew by around 9% year over year in their last quarter. Even if we shrink our scope to just daily active users, they're still clocking in over 1.5 billion people, which also grew by around 9% year over year. And again, this is just people that use Facebook alone. If we include Instagram, WhatsApp, and Messenger, the number climbs to an estimated 2.7 billion people using at least one of those services every month and over 2 billion using it every day. That is an insane amount of people. Keep in mind that the world's population is only estimated to be less than 7.7 billion. So Facebook, in one form or another, has access to over a quarter of the world's total population every single day. That's a mind-blowingly large amount of people that Facebook can target with high-margin online advertisements. Speaking of which, according to IAB's Internet Advertising Revenue Report, digital ad revenue grew by over 20% year over year in 2017. That is insane growth when you consider that the raw total was almost $90 billion and has most likely passed $100 billion by now. Not to mention that digital ad revenue is taking a bigger chunk of the overall advertising market as traditional mediums like television and newspapers continue to see declines while digital is on the rise, both of which dropped 3% and 7% year over year respectively. And the crazy thing is that Pivotal Research estimated that Facebook and Google alone accounted for 90% of that growth. And what's cool is that the market should continue to grow for at least several years to come, since according to Statista, digital ad spending is estimated to be over $300 billion this year and increase to over $500 billion by 2023, with the largest amount of that spending being on social media advertising, which is exactly the market that Facebook dominates with billions of users, most of which use their platforms on their smartphones, which has led to 93% of Facebook's advertising revenue coming from mobile revenue, which is up from 87% the year prior. An important statistic when you consider that over half of global digital ad revenue comes from mobile advertising alone, which is growing faster than any other ad revenue segment out there at 36% year over year in 2017. Admittedly, this growth will likely slow down in the years to come as the market begins to mature, but it is still leading to some very impressive earnings for Facebook. In fact, total revenue increased a massive 30% year over year in their last quarter and 37% for the full year, bringing the total to over $55 billion. That is enormous growth for an already enormous company. And despite costs increasing by over 60% in their last quarter, which we'll talk about more in just a second, they were still able to squeeze out a 6% growth in operating income for the quarter and around 23% for the year. Not to mention that their EPS increased by 65% in the quarter and 40% for the year. Although much of that was due to tax reform and share buybacks, but this still demonstrates amazing performance despite an enormous increase in costs. Speaking of which, because of all the data security concerns that mostly started back in February of last year when political consultant Cambridge Analytica wrongfully accessed personal data from 87 million Facebook users, and then it escalated to other security issues throughout the year, Facebook has been spending a lot of money to beef up data security. In fact, last year they increased their total headcount by a massive 42% for that very purpose. While I do believe that this was an absolutely necessary step to take, it ultimately took a big toll on their margins, with operating margins dropping from 50% in 2017 to 45% in 2018. On the bright side, that's still a pretty high operating margin, but the concern is that it may continue to drop, at least in the short term. See, Facebook is guiding for costs to be at around $45 billion in 2019 at the midpoint of their guidance. And while they don't give revenue forecasts for the full year, analysts are predicting revenues to be somewhere around $68.5 billion. That leaves them with an operating margin that will have dropped once again, now down to around 35% this year. Still, I think it's a necessary expense to bring back consumer confidence and earn everyone's trust. Plus, it keeps an otherwise great stock low at a more attractive valuation, at least in the short term. Which, by the way, they currently sport a forward PE ratio of just around 18. Although, to be fair, some of their other metrics are a little more on the higher side, with a PEG of around 1.4, PS of 8.3, and PB of 5.5, with a market cap that is currently higher than their enterprise value by around $35 billion, and their current share price still trades higher than their 50 and 200-day moving averages, so it might not be too crazy to wait for a pullback before jumping into a long-term position. Having said that, even at this price, Facebook still looks attractive to me because of their future potential, that being a growing market in digital advertising with rising ad rates and an already enormous amount of people to advertise to that continues to see growth. And despite Facebook's user growth slowing down, which is inevitable once you reach a certain size, they also own what is arguably the hottest social media platform in the world right now, with Instagram, that according to Statista has been seeing enormous growth every single year, which you can see on this chart here. And as of June of last year, they had already passed over 1 billion monthly users, and that number is likely much higher by now. Not to mention that Facebook continues to invest in their future, which is also evident in their efforts to enter the fast-growing e-commerce market with online shopping through their social media. This has taken shape through Facebook offering pages for businesses and brands, peer-to-peer shopping, and integrating shoppable posts on Instagram ads. Not to mention that they also acquired GrokStyle recently, which is a visual shopping and artificial intelligence startup that uses picture technology to search for products. And with Facebook's strong balance sheet, they have the resources for making more acquisitions and investing further in this technology in the future. Speaking of which, they currently have over $10 billion in cash, over $30 billion in marketable securities, over $50 billion in current assets, and almost $100 billion in total assets, with only around $7 billion in current liabilities and $13 billion in total liabilities. That alone makes Facebook a really attractive stock, as it is one of the most impressive balance sheets out there in the entire market. So in conclusion, I would not mind holding Facebook stock as a long-term investment, despite there being some issues like data security, which they're investing heavily to solve that issue. And then the other thing would be a slowdown in user growth. But you have to keep in mind that this is already a really giant company, so any kind of user growth at all is good enough for me. Not to mention that they still have a lot of future potential in areas like e-commerce. and they have that huge monstrous balance sheet that they can use to make just about any type of acquisition that they need to in order to fuel any future growth that is necessary. But the other thing too to keep in mind is that Facebook does not currently pay a dividend, and if this company ever started paying a dividend, I think the stock would just become way too attractive for me to ignore at that point. Having said that, there's just too many other stocks that I like more at the moment, so I don't have any current plans to invest in Facebook, but if that ever changes, I will definitely let you know. And if they experience a very significant drop like they have in the past, then I would also probably reconsider at that point too. Either way, I will make sure to give you guys an update and let you guys know if I ever do decide to pick up the stock. So I guess we'll just leave it at that. Thank you so much for watching. Make sure you leave me your opinion on Facebook stock down in the comment section, and hit the like button if you enjoyed this, and I'll catch you in the next video. Take care. Bye-bye.